Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the weekly wrap-up for the week ending July 25th. For the week, corn, December corn down 7 cents, November beans down 2 cents. Fairly quiet. Wheat was actually up 3 cents. The interesting dynamic was in the livestock. I'm touching that a little bit. Cattle up $5. Same time, hogs were down $6. Logistics and weather continue to be the talking points as we go through the balance of the growing season. Weather obviously more short-term related in regards to finishing out pollination in many parts of the Midwest with corn and or the late development of corn in some areas as we approach harvest. And soybeans, obviously August tends to be the month that makes or breaks the bean crop, and that's why we may have a little more premium in this bean market right now than corn on a relationship standpoint as far as the ratio, and that's been that way for a couple of months. There's two things the market's telling us right now. One is the spreads. When you look at corn spreads, we continue to see spreads slowly widen, add carry, especially in the new crop I'm talking, where we're approaching nearly 70% of full carry in most months from December forward. So the market's saying it's a big crop. The second thing in logistics, transportation costs continue to go higher. Barge freight rates go higher. Rail rates continue to go up. Logistics have been, and transportation has been an issue for several months, especially going back into last winter with all the cold weather issues, and it looks like it's spreading forward. And to take that a step further, export sales for new crop, especially on soybeans, continue to be very good. Had big numbers again this week with export sales now ahead of last year's pace at this time for bean exports on the books. Meal continues to be well above last year. Corn at this point is a little lower. So as we go into harvest, logistics, transportation, and also space will pocket into that whole scenario. Weather conditions, crop conditions are a watching point, but as every day goes by, they're less of a concern. Not to say the crop's perfect everywhere, but the crop conditions continue to be very good, and we'll see what Monday's report brings. Just a quick update on upcoming reports. August 12th is the supply and demand update by the USDA. The interesting thing about the August report is that is the first report where the USDA actually goes out in the field, does some crop scouting, and really puts out their first estimate on yields. So the market will be anticipating that as that wears on. Believe it or not, August 1st is next week. In some parts of the southern Midwest, we're approaching 30 to 40 days away from harvest in some areas. So especially in soybeans, which will be key because of the tight old crop scenario, that window where the processor still needs to fill bean needs as we continue to see very strong bean basis and obviously an inverted market between the old crop and the new crop. Cattle on feed this afternoon for the week, for this week, was 98%, pretty much in line with what the trade was looking for. Placement's a little lower, which is a common theme. 94%. Trade was looking for about 95.5. Marketing's right in line at 98%. So the market will anticipate that's a little bit positive because of that placement number. Cash cattle this week went to all-time highs, along with the futures trading something north of $160, depending on where you're at. All in all, as far as the grains are concerned, we continue to see some give-up selling in the old crop, but movement's fairly light. New crop sales continue to be very light. Obviously, market prices having a lot to do with that. And I think that's building into the dilemma on transportation as we move forward. If you have any other questions about the grains or any other commodities, feel free to give us a call at BIS Commodities. Phone number is 800-373-2525 or biscommodities.com. Have a great weekend.